Welcome to protectmyretirement.today, and the purpose of this website is to answer the question, is it reasonable? Is what reasonable? Well, before we get to that, let's cover some ground first. Over the last 90 years, how many times has the stock market, when I say the stock market, that's the S&P 500. I don't go by the Dow Industrial, it's only 30 stocks. So the broader market, the S&P 500, over the last 90 years, how many times have we had a 1 year period, 1 year, where we've gone up 58% in a 1 year period? Question. The answer is, we've never had that. How many times in a 2 year period? Over a 2 year period, do we have a cumulative return of 58%? The answer is, we've only had that 4 times. So why am I focusing on 58%? Well, it's because of this graph right here. This is the S&P 500. This is through the end of May 2014, and obviously from our website you realize that 2014 is particularly germane. So we are right about here in the S&P 500. In fact, 2 weeks ago the S&P set an all-time high. Why do I ask about 58%? Well, in 2008 the S&P went down 37%. From here to here is a 37% negative return. In order to get back to positive, mathematically, you need to have a 58% return to get back to even. Now, incredibly, if you add up the returns for the S&P in 09, 10, 11, and 12, they add up to the button, all the way up from this period to right here, they add up to 58% return on the button. Now, 2013 was a big year, almost 30% just in 2013 alone. So people felt pain, everybody felt pain from 08 down to the bottom. The old saying that your 401k turned into a 201k. Then we've had 5 straight years of positive returns. The last year finally getting us up above to where we're feeling good about things. Now let's cover 2 more quick questions. How many times over the last 90 years has the S&P 500 gone up 6+ years, 6 years or more, straight of positive returns? How many times in the past 90 years have the markets gone up 6 straight years? And the answer is 3 times. Right after World War II, when Ronald Reagan was elected in 1982, and then the boom years of the 90s. All 3 periods were extreme economic expansion. Why is this important? Well, as we go back to our graph, we've been up 5 straight years. We are now in 2014, so we're into our 6th year. Question, are we in extreme economic expansion today? I don't think you'll find anyone that is going to profess that we are in an economic expansion. There's still a debate if we've ever come out of this recession that occurred here, that a lot of this run-up is just because of Fed stimulus. Now we come to our last question. You're probably glad that I'm going to stop asking you questions. And the question is, what are you doing about this right here? There's an axiom in investing. You buy low, you sell high. Everybody had pain through here. Everybody experienced the run-up. If you held course, what are you doing about this situation in the context that the market's only gone up 6 years straight in economic expansion time periods? So what are you doing? Question mark. Now that takes us back up to how we opened the video. Is it reasonable? Is what reasonable? Well, is it reasonable in this particular time period right now to be moving your retirement savings to something stable? Because if you don't have a strategy for this right here, if you don't have an answer for what to do about this, then you are going to experience a potential another 2008. So is it reasonable to be moving your hard-earned savings to something stable? The protectmyretirement.today website is laid out to give you supporting data on why we believe 2014 is the time to prepare. We introduce our Protect and Advance strategy and educate you on how to manage our current economic conditions. whether it's through our direct help or you doing it on your own, for instance, in your current company 401k. Navigate through our website and reach out to us with feedback or to book an appointment. Thanks for watching.